welcome back. Now we'll look at where markets ended the week as investors digest first quarter earnings results and weigh uncertainty in Iran. Intel soared on Friday. It had a blockbuster quarterly report. And don't forget, the government owns a 10% stake in Intel. So it, too, is making money on this huge move in shares of Intel as its chips are being widely used. Next week will be jam-packed with reports on quarterly earnings from tech giants Alphabet, Amazon, Meta, and Apple. Also, the last scheduled Federal Reserve meeting is happening with Jay Powell at the helm. Joining me now to look ahead is Fitz-Gerald Group principal Keith Fitz-Gerald. Keith, great to have you. Thank you so much for being here.
It's my pleasure. Thanks as always. We got an exciting week coming up, don't we?
Yeah, we sure do with all these earnings. And I want to get your take on what's driving markets before we look at those earnings, because this market is up in the double digits. Ever since the end of March, you've got the NASDAQ up in the double digits, the Dow Industrials up in the double digits, S&P 500. Obviously, this market is trading well, even in the face of some volatility. Do you think that indicates confidence in what's happening with the president's leadership in Iran, or earnings, or what?
I think it's a little bit of everything, but most importantly, it's validation that innovation continues and it's worth quite a bit of money. Investors who went to the sidelines thought they were being smart 8 weeks ago are now in the unfortunate position of having to play catch up. So FOMO is beginning to feed in, but most importantly, underlying all that is great earnings, great numbers, and super strong companies.
Yeah, we've got expectations of S&P 500 revenue up about 10% and earnings growth of 16.2% so far. And analysts expect earnings to likely finish up 20%, assuming historical average beats. You saw a big beat on Intel. What's driving the earnings picture right now?
Well, again, a lot of it is going to be attributed to AI, but it's really a misnomer or a misplacing. It's right attribution, wrong causation. I think what we're seeing is the data itself is becoming valuable, and it's cross-pollinating in every industry. I've often said that every company in every sector will adapt, adopt, or die, and we're beginning to see that hit the balance sheets. So I see these people saying, when's AI going to monetize? Well, the answer is right now, and the smart investors are getting ahead of that.
Yeah, and over the next 5 trading days, 41% of the S&P 500 market cap is expected to report earnings, with Apple, Google, Microsoft, Amazon, and Meta. Would you get ahead of those quarterly numbers and buy those stocks today?
Well, I would. As a matter of fact, we've been doing that quite substantially over the last few weeks, in fact, particularly during the downturn when everybody else went running for the hills. I thought, boy, what an engraved invitation this is, given the economic backdrop.
Okay, so you want to buy tech. Are there other areas that you believe are poised to move higher? Where else do you want to be exposed?
Well, I still want to be in defense for obvious reasons. War is unfortunately a growth industry at the moment, and I think ultimately peacetime is going to require even more spending to sustain. But I'm interested also in medicine. Particularly I think we're going to see AI blossom in terms of how they solve cancer, how they solve Alzheimer's, diseases that we have previously dealt with and not been able to defeat. I think within the next 5 years, there's a very real possibility that all of the computing power we're bringing to bear solves those things.
Yeah, great points all around. What about the Fed? Next week is the final meeting of the Fed with Jay Powell at the helm, we think. Of course, we're still waiting on whether or not there's a vote in place, and we have a date for a vote for Kevin Warsh, because Jay Powell threatened that he would stick around if we don't have the chairman there. But what are your expectations for the Fed in the week ahead?
Well, I got to tell you, my expectations, sadly, are not very optimistic. I think the Fed meetings with Chairman Powell in place have deteriorated to a crapshoot and an excuse to be data dependent rather than having an actual strategy. So I'm one of these individuals that's looking for a transition. I don't know who is going to take his place, but whoever it is, I hope, and if it is Warsh, I hope we see proactive management. So what I would hope to see in this Fed meeting is some acknowledgement that one is on the way out, a new regime is on the way in.
Yeah, I know. I'm pretty sure it's going to be Kevin Warsh as the next chairman of the Federal Reserve. He has wide support. Bottom line, do you believe interest rates are going lower in 2026?
That is a very tough call. I'm of the belief that they should have been cut a long time ago. I would like to see them lower, but I don't know that we're going to get more than one cut. In fact, I think we're going to get hold and do nothing as long as Powell sticks to his menu.
Wow. And what about the macro story? Oil prices up about 50% since this war began on February 28th. Do you want to buy oil? How are you investing, around this spike in oil? And what do you believe it's going to mean for GDP and inflation for the economy?
Well, inflation is measured using very old-fashioned statistics, so it's going to show an upward pressure. But I personally have been investing in oil. I own Chevron, a rather large block of it, for my own use, and I love the dividend. I love the global footprint. So I'm not price sensitive as much as I am dividend sensitive and stability sensitive. I think the Strait of Hormuz is going to prompt oil manufacturers around the world to rethink how they transport and where they manufacture their goods. So to me, it's a long-term hold. It's a continuum. I want to invest more. I think the numbers from Chevron this next week on Friday, if I'm not mistaken, are going to be blockbuster given the price change.
You are correct. Chevron reporting earnings on Friday, May 1st, and we will look forward to that. Keith, great to see you. Thank you.
Thank you so much. Have a great one.
All right.